The Dow Jones rallied for the sixth straight day to close at its highest level in 2023. The Nasdaq and S&P also rise ahead of big banking earnings from JP Morgan and Morgan Stanley. Stocks in the Asia-Pacific trade mixed, while the GIFT Nifty is indicating a higher start for the Indian market. Crude corrects with prices falling over 1.5% as China's second quarter GDP data disappoints. A partial restart of halted Libyan supply also pushes prices lower. LTI Mindtree's deal wins remain strong while margin expands for the second quarter even as revenue growth slightly misses estimates. In key earnings today, watch out for numbers from IndusInd Bank and NLT Tech Services. Infosys signs a $2 billion deal to provide AI and automation-led development for a strategic client. Sheela Foam's board approves the acquisition of Kurlon and an acquisition of 35% stake in furniture provider for Lenco, while sources also tell CNBC TV18 that Swedish battery maker Clarios is likely to exit its 14% stake in Amara Raja batteries. The Financial Stability Board finalizes the regulatory framework for crypto asset activities. The framework makes it mandatory for service providers to have an enforceable legal basis for their activities. Regulations in crypto asset markets must be equivalent to those in traditional markets to prevent circumvention. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking for you on this Tuesday morning. But as we always do, let's take a look at what the Asian markets are doing as we speak. Well, largely lower, I have to say. Nikkei, which was shut yesterday, is trading in the green. But other than that, it's a 400-point cut on the Hang Seng. And we have the Taiwanese index, which is trending lower by 40 points as well. Across the board, even if we look at something like a Shanghai, which is lower, the Chinese GDP data disappointed. The unemployment is at a record level. So that is something which is hurting the markets as well. The GIFT Nifty, that'll come up for you on the screen and we'll compare it with Nifty futures, and that one is indicating that the start could be in the green for our own markets, comparing it with the futures because of, it's a 40-point uptick that we are seeing on the GIFT Nifty right now. That's the implied open. But moving on, global equities saw some pressure yesterday following a weaker than expected macro data from China. Let's listen in to what Ruchir Sharma, Rockefeller International, has to say about Chinese growth going forward.
I've been a long-term bear on China, and so I think that what we need to get correct in China is the growth expectation. And I think that's what the market is doing finally, which is that when you have a country where the population is actually declining and you have such a large debt burden, there's no country in history that's been able to grow at a rate of more than 2 or 3% under that scenario. I don't take the other side of the trade, which is that, it's become uninvestable now, and so we shouldn't touch China. I think it's just too big and too large an economy to ignore.
Okay, and in the U.S. markets, Wall Street ended Monday's trading session higher with the Dow Jones gaining over 70 points, closing at its highest level in 2023. The S&P 500 was up 17 and the Nasdaq Composite, the day's outperformer, closing over 130 points higher. All eyes are now on next week's Fed meeting from July 25th to July 26th. Let's also listen into some important market opinion coming in now from Yardeni Research's Ed Yardeni.
Wall Street economists and strategists like to be contrary and to say that the Fed is not on the right track, but I think they actually can say mission accomplished. I hope they don't, because that'll be a jinx. The market is broadening out. Look, beyond 4,600, I'm looking for 4,800 to 5,400 over the next 18 months. I think that's going to be because there is no recession, because earnings are going to be picking up, and I think because the market will, in fact, broaden out.
Okay, all right. That is some expert opinion coming in, and that's the global market action as well. But what about our own cues, right? These overnight cues will have an impact on Indian markets. We have a lot of domestic cues as well to track. We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Pretty good. So the SGX Nifty is suggesting a mildly higher start, but it was doing so even yesterday. And in the last 1 hour or so, we saw the markets literally take off. So yet another day where the markets have scaled fresh record high levels. We conquer that 19,700 mark on the Nifty. In terms of the flows, they appear to be fairly muted. So the FI net bought only 73 crore in the cash market. The DII buying was 64 crore. In fact, what's surprising is that yesterday the FI gross volumes came down quite considerably. Yesterday, the FI gross inflows was about 8,300 crore rupees. Now, this is a good 35% lower than the average over the last few days, which was between 10 to 11,000 crore rupees. On Thursday and Friday, it was the IT stocks batting for the markets moving up. And yesterday, while frontline IT names like Infy, TCS came off a bit and saw some of that momentum waning, other stocks like banks enthused by HDFC Bank's result, Reliance Industries came to the party. So many stocks, TCS, HDFC Bank, Kotak Mahindra Bank, Infosys, Reliance, all of them. So more than 1,000 crore of delivery volumes yesterday. Today, you've got the FinNifty expiry and plus quite a few numbers. You've got ICICI Lombard General Insurance, ICICI Prudential, IndusInd Bank in the frontline pack, L&T Technology, Polycab India. You spoke about the global markets. It was a close with mild gains for the frontline US indices, but it's a big week of earnings in the United States. Earnings from Tesla, Netflix, Bankam, Morgan Stanley, Goldman Sachs, all of them will be reporting numbers later this week. In terms of the macro indicators, the dollar index still below 100 mark, a positive sign. Crude prices on that weak economic data that we were just listening to from Ruchi Sharma, crude prices are still hovering around $78.5 per barrel.
Okay, all right, that's the market setup, but you did indicate a lot of stocks will be in focus. Let's talk about the other ones. Abhishek has that list.
Well, to begin with, LTI Mindtree, they reported net profit of 1,151 crore. We were working with a poll of 1,194 crores, a tad bit miss over there. Even the revenue has come in slightly below our poll. However, EBIT margin has remained, in line with our poll at 16.7%. Tata Elxsi, the revenue is up 17% YOY and about 1.5% sequentially. This is a slower loan growth than slower growth that they have seen versus prior quarters. Margin has come in at 27.1%, which is a decline of about 340 basis points YOY and about 20 basis points sequentially. Federal Bank, Fedfina, one of the subsidiary, has filed for DRHP, for the IPO. CNBC TV18 had alerted about, their upcoming IPO way back in Jan 2021. Sheela Foam, they have approved acquisition of Kurlon and House of Kara. So, company to acquire 94.7% in Kurlon Enterprise for 2,150 crore. And in Kiara, they'll acquire about 35% for a consideration of rupees 300 crores. Sources do tell us that Amar Raja will see one block today. Clarios ARBL holding LP to exit 14% of the stake that they hold. The price that they have decided is about 651 per share, which is at a discount of about 5% to yesterday's closing price. Infosys, the company has entered into framework agreement with one of its clients to provide AI and automation-led development, modernization and maintenance service. The total client spent over the next 5 years will be about US $2 billion. Back to you.
Okay, all right. Thank you for that, Abhishek. Finally, let's talk about the FNOQs. Manglam is joining us with that one. Manglam.
Well, it is a firm grip that the bulls have on the market. In fact, for most part of trading, yesterday's trading session, the Nifty was above that 19,600 mark. And towards the end, it went past that 19,700 mark with extreme ease. And now the gift Nifty, adjusted for yesterday's futures close, is indicating an uptick of almost 40-45 points at the open itself. Now, it was for the first half of trade, the IT index that supported the Nifty. IT index actually moved to the high point of trade. But the second half of trade was all about the Nifty Bank. As you can see, the Nifty moving higher. We have the Nifty Bank as well, which led the Nifty higher. And alongside that, it was basically, the Reliance stock and the HDFC Bank stocks, both of them taking the indices higher. So the first half was supported by the IT index. The second half, we had HDFC Bank's result, which led Nifty Bank to move higher. And by virtue of its sheer weight, Reliance with a 2% move took took the index further higher and comfortably above that 19,700 mark. And, it was important for the Nifty to cross that 19,650 mark to see further up move, and that's because there was a lot of call writing at 19,500 that shed about 20 lakh shares in open interest, so there was a fair amount of short covering that led the markets further higher. In terms of gross cash volumes, they were higher, but net cash volumes, nothing really to write home about. Almost about 130, 140 odd crores bought by both FIIs and DIIs put together. In index futures, the FIIs continue to buy, this time around close to around 218 odd crores, added about 4,400 longs and close to around 2,000 short contracts as well. With this, the Nifty net long contracts by the FIIs stand closer to 91,000, and that's something we'll have to watch out for because 70% of their positions are on the long side itself. Talking about things to watch out for, can things get overheated? Just keep an eye out on three things. One, the Nifty July futures premium has compressed from 34 points to around 10 odd points. We did see the VIX spike by almost 6% in yesterday's trading session. And thirdly, the put-call ratio, a measure of overheatedness in the market, jumped past that 1.5 mark, currently 1.54. So these are cues we need to keep an eye out on for looking at any signs of consolidation. Yesterday saw a fair amount of put writing, nearly 5 puts written for every call that was written by the FIS, 3 lakh puts written and 60,000 calls written. Where were those puts written? We had 19,600 and 19,700. All those puts seeing heavy writing, telling you that there would be strong support around 19,600 to 19,650 itself. On the way up, there are still some writers at the 19,800 call. So levels upwards of 19,830 is something that we'll be watching out for in terms of congestion. The key joker in the pack today will be the financial services index. It's the Nifty Financial Services expiry today. The index is close to around 20,300 right now. Maximum open interest at 20,500 call and 20,200 put.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, the G20's Financial Stability Board finalizes the regulatory framework for crypto asset activities. We'll get you more details on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Z Entertainment's board has constituted an interim committee of senior executives to run operations after market regulator SEBI barred Puneet Goenka and Subhash Chandra from holding key managerial positions in listed companies. Now, Puneet Goenka has written a letter to employees saying the proposed merger with Sony has reached at a very important juncture and the completion of the merger is his top priority. He also said that promoter-level problems should never be the problems of the company as well. Of course, it's a developing story. We'll keep tracking that for you. But moving on, sources suggest that FarmEasy has accepted Manipal Group's offer, but rights issue for existing investors will be done first to help company raise funds to repay debt. Nisha Podar is getting us those exclusive details. Nisha.
That's right. Sources with direct knowledge have shared with us that API Holdings, which is the parent company of FarmEasy, had a late evening meeting on July 17th yesterday with all the shareholders and investors in the company. And they have come to a consensus that FarmEasy will do a rights issue of around 2,000 to 3,000 crore rupees. The amount will be decided in the next few days. They have also told the investors that they have accepted the Manipal Group's offer, but Manipal Group will be given a chance to invest only the shortfall from the rights issue if all the shareholders do not participate in the fundraising that is being taken up right now. So what we are gathering is that the investors had raised a concern about this particular development of selling shares or getting in capital infused by Manipal Group at a low valuation. And therefore, the company has now decided that investors will be given the first right to invest at face value of the share, which is a much lower valuation. We also gather that Manipal Group has offered to invest up to 1,300 crore rupees, and whatever the shortfall will be matched up by Manipal Group. Remember, the valuation post money is going to be around 6,000 to 7,000 crore rupees, depending on the amount that they are raising. It is going to be a much, much lower valuation from $2.8 billion in which the last fundraising had taken place, and way lower, 90% lower from $5.6 billion, which was the peak valuation. FarmEasy, remember, needs 2,500 crore rupees to repay debt to Goldman Sachs. So that's what we are gathering, a consensus being built with the investors, and Manipal Group's offer has been accepted, but only to the tune of shortfall of rights issue.
Okay, all right. Thank you, Nisha, for joining us with those exclusive details. So, of course, we'll keep tracking this one. With that, we'll slip into another break, and this time we'll get you all the cues from the commodities market when we come back. Welcome back. Still tuned into Power Breakfast on CNBC TV18. Let's talk about commodities now. A lot of action happening there as well. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, Sonal. Thank you so much for that. Well, the metals are extending decline on weak China data that we saw come in yesterday. And the fact that China hasn't come in with the major stimulus measures even now is what's weighing onto the markets. So even as the last week was on a positive one, this week, for the second straight day today, we've seen further declines come in for the metal prices. Also, there is rise in Chinese output. The Shanghai inventories have been rising, and that's weighing on as well. So not just the non-ferrous metals, but steel is now trading at a near 5-week lows. You have coal prices trading at a 2-year lows right now. And after the overnight decline in the crude oil prices, where we saw both the varieties decline by nearly 1.5%, there's a 0.5% of an increase coming in for the Asian markets right now. And this is ahead of the U.S. weekly data that will tell you on what kind of inventories are we looking at in U.S. I mean, remember, this is the major summer driving season demand right now. So weekly inventories right now are quite supportive of the prices, and that's exactly where the markets are taking cues from.
Okay, all right. So that's what's happening in the crude oil market. Thank you, Manisha, for getting us up to speed with that one. Moving on, grain prices surge after Russia terminates the Black Sea food grain deal hours before the deadline expired. Prices of wheat, corn and soybean prices rose due to Moscow's withdrawal from the deal, which was brokered by Turkey and the United Nations in July of last year to avert a potential global food crisis. Okay, all right. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next with all the action ahead.